27/4 Academy meets independent alternatives. Find more content on our social media platforms.
Started about 13 years ago when Tatenda and I first met at university trading competition. We excelled. We came first and second respectively. We don't like to tell people who came first and who came second, but the two of us know. From there on, we became quite good friends. We actually started investing quite early.
There's no hierarchies. Everybody is allowed to participate in different aspects of the business. Between myself and Grant, we run a champion and challenger principle where Grant is the champion of certain roles and functions and I'll be his challenger and vice versa. And we do that so that we hold each other to account, keep each other on our toes, and also play devil's advocate.
Being an entrepreneur in the asset management industry arguably is a lot more difficult. There are two things you need. It's time and trust. You need a very long time to build track record, and that's oftentimes limited by how much working capital and investor capital you have. When you're starting out, those are in very, very short supply. The other thing is trust. Not very many individuals or institutions are going to give significant amounts of capital to start up asset management businesses. So there's a responsibility to fill that trust void, and you do that by being consistent, having a clear strategy on how you're going to engage different investors that your products may be suitable for, and regular engagement. I think those are some of the more important things that we picked up along the way.
And there's an old African proverb which says that it takes a village to raise a child. And for us, this is not just a proverb, it's actually lived reality. And I think we'll specifically mention 27/4 investment managers.
When we started the company, we had to very quickly learn different roles. To be an investor and a portfolio manager is very different to being an entrepreneur, and at the same time to be a client-facing individual.
And we had made a couple of observations to get to that vision. We haven't changed the vision, but we've made some extensions to the vision, and I think the most significant extension that we've made to the vision has been to branch out from only managing hedge fund assets to also looking at long-only investments. So at the moment we are also managing our flagship hedge fund product, which is a more multi-strategy hedge fund, and we have also launched a bond fund product, which is the more active bond fund.
Some of the key enablers that has allowed the firm to break through, especially during 2020, was delivering very good investor performance for their members and their portfolios during a very difficult period of time. We were able to put to practice what we had preached for 5 years, and it was great to see some of the results come through more client support.
That we did quite well during the COVID-19 crisis was that we preserved capital and we performed quite well. We were positioned correctly for the late cycle underperformance, and I think that helped to move some of the investors that we had been engaging with over a long period of time to see that we really did what we said. So the performance was what it said on the tin, and also I think that helped them to make the decision.
And I think were a different person other than Tatenda probably would have thrown in the towel a very, very long time ago. But we were able to keep each other going during a very long winter. As things stand now, we are in much healthier shape. We've got a number of very good institutional clients, and we can see the business growing very strongly from here.